What is up, family? Spektrades back with another video. In today's video, we're gonna get into the ICT OTE. I actually made a video on this a while back, but in this video right here, I'm gonna go over more examples and just show you exactly how the OTE is one of the most powerful confluences that I still use daily when I'm trading. Make sure you like and subscribe down below. And without further ado, let's get straight into this video. The optimal trading tree is the sweet spot between the 0.62 level and the 0.79 Fibonacci retracement level. This is exactly where smart money step in. For the execution strategy, we have to identify the higher time frame. This is our top-down analysis, right? Where we go from the higher time frames to the lower time frames. Me personally, I'm a scalper, and I usually only go on the higher time frames, like the 4-hour and the 1-hour, just so I can gauge the higher time frame bias and find my draw on liquidities. So I'm on the 4-hour time frames right here. What exactly is the 4-hour showing me, right? We see that price pushed up higher to clear these prior highs. That's number one, right? That's the first thing I always look for, is a liquidity sweep of a prior range high. For this model right here, this is a sell continuation type of model, right? So price already swept these highs. Then price left this prior low right here. So once price breaks to this old low, we have a new dealing range from this prior old high to this new prior low down here, right? But this is a higher time frame dealing range. We don't trade the higher time frames. So for me personally, I have to scale down on the lower time frames to see the recent range, right? But I use the higher time frames, like I stated, to find the draw on liquidities. So what are my draw on liquidities? So after price sweep this high right here, and then we get our market structure shift, the trend has changed. We were once in this bullish uptrend, right? Make sure you watch my market structure videos. This is a bullish uptrend right here. But once we get this market structure shift right here, or we label it a changed character, we're now looking for price to push down lower. So this old low right here and these old lows right here, these are now my draw on liquidities, right? I use these as markers on the lower time frames as like targets. So I want to see price comes to these lows right here, boom and boom. So now I know exactly where price is leading to go. I can now predict the future, you can say, right? Because now I know price wants to see these old lows right here. So when I'm trading, I'm not looking for price to go long, right? I'm looking for price to drop lower to push down and clear these lows. Now I can scale down on the lower time frames. Let's go down on the 1 hour. On the 1 hour, we're just looking for the nearest range, right? For the recent range. For me personally, how I use the recent range is on pullbacks, right? On the 1 hour, we can't really see too much right here. Let's go on to 15 minutes. Now on the 15 minute time frames, we see this right here was our market structure shift that we have of these prior old lows. And ever since this market structure shift, pay attention to this, right? With every pullback, price is giving us a liquidity sweep and then creating a new dealing range. So we see that price pull back, sweep these prior highs right here and mitigate this zone to drop lower. Perfect. Then price pull back once more, sweep this high right here, right? You see it right here, sweep this lower time frame high. I'm now on the 15 minutes time frames. Sweep this prior high right here to then drop lower. But we got a failure swing. So this right here is still the protected high. Right here, this is still the protected high, but we see that no prior highs went higher than this old high right here. So this right here becomes our new range high, and this right here becomes our new range low. This is our new dealing range. So this is my 4-hour draw, and then this is my next 4-hour draw right here, right? This is where I'm looking for price to pull back to, these old lows right here. Perfect. Now we have my new dealing range from this prior high to this new low right here, right? Price just been pulling back and respecting old zones. You see price pull back, respected this old low right here to then drop lower, pull back, respected this order block to then drop lower, and giving me consistent break of structures of prior range lows right here. Now is the perfect time for me to use my OTE. As you can see, we're just gonna grab your Fibonacci from the range high all the way to the range low right here. These are the settings for the Fibonacci, right? I'm gonna go over the settings for a little bit. So we have the 0%. The 0% is just the beginning of it. Then we have the 1%. But the key levels that we use is the 0.62 level, the 0.705, as you can see right here, the 0.705 and the 0.79. Another key level that's extremely important that I didn't really put right here, I'm gonna put it right here, is the 0.88, right? Go back test this. You're gonna see how powerful that level is also. Sometimes when price push at the extreme of a range, it's possibly going for that 0.88, right? That's just another key level right here. But these are just the settings for it, for anybody that just that doesn't have the OTE. But this right here is now my key levels. So a lot of people are like, I don't know what order block to use. I don't like, because look at this right here. This look like a clear order block, right? I'm just gonna use this right here. This look like a clean order block, and this look like inducement, right? So a lot of traders may just take this right here. Perfect. This is clean right here. This is boom. I'm just gonna attack the same old low right here. Perfect, right? But once you know that this is your main dealing range, right? You know, you did your whole top down analysis. You started looking at after this breakup structure, right? After this major breakup structure, on the pullbacks, with every new high is a new range. So we have this high right here, push down lower, a breakup structure, pull back, clear these lower time frame high, a new high right here, pull down, breakup structure, pull back, clear these lower time frame high. Now we have a new high right here, and this high is a protected high. This high failed to take this one out, so this right here is a strong high, and then it pushed down all the way down here. Then we started getting this base right here. So now we're looking for our pullbacks. This right here will not work, right? First and foremost, it won't work. The number one reason it won't work is that it's still in a discount level. Let's grab our gain box from the high to the low right here, right? As you can see, this right here is still in a discount level, right? Like we don't sell in discount, we sell at a premium level. And at our premium level, this is where we have our OTE levels, right? If you are guessing, like you don't know which zones to work, you don't know which one to work, use these confluences. When you align these confluences with your range, they remove all the errors, right? That happens to, like, when you don't know what zones to pick, right? So a lot of traders may have got caught up in this right here, in this small order block, right? But for us, we know that the main zones is the 0.705, right? The 0.705 to me, in the 0.6, in the 0.88. That's kind of like the main powerful zones that I love to take trades from. At the 0.705, right? In the 0.88. And how I do it, I just place my trade right at the 0.705 level, place it at the level, and your stop loss goes at the prior highs, right? The main reason is that you give yourself room, right? When price pull back, we may use the 0.62, but me personally, I always see price pull back at least the 0.705. That's why I like the 0.705. It's literally like the sweet spot. So when price pull back, right, you give it room. You may use the 0.705 and drop, or it may use the 0.79 or the 0.88 secret level I just gave you guys, right? You may use that one also to pull back. So you place it, your stop loss, at the range high. So just in case it's just playing around, right, then we get that move, right? It's two ways we can take this trade. For this way right here, this is just the risk entry day trade. If you were like a day trader, this is the 15-minute setup. Where's your draw on liquidity? This old low as your first take profit, the range low, the 4-hour draw, and then this next 4-hour draw right here. Perfect. These are like the take profits right here. But it's two ways, like I stated, you can take this trade. For me personally, this right here is the risk entry. I normally don't use the risk entry, but I use the confirmation or the super confirmation entry. For you to use these entries, first you have to scale down on the lower time frames. So this is my higher time frame zone right here, right? The 15 minutes, right? This 15-minute zone right here. Now we're gonna scale down on the 5-minute time frame. Now on the 5-minute time frames, all I'm looking for, like literally, basically all I'm looking for is for price to give me a liquidity sweep inside of my higher time frame zone, to then extend lower, right, and give me a market structure shift right here. This is going to give me a new dealing range. Just like we had this new dealing range from here to here, this right here is a new dealing range also. In the recent order block, for me personally, I like to use the recent zone right here, right? This is like a 10-minute, you can see right here, perfect. The recent order block, right? I use this right here in my stop loss right at the prior high up here, right? Because if price pull back, I like to put it, especially if I'm trading with the OTE, I like to put it right at the 0.88 or right above it, just in case price even pull back and test the 0.79, right? I always like to give myself room to place my trades. That's why when I scale in my trades, I usually go lower risk too, right? My higher risk is my first trade, and then as I'm scaling in, I'm lowering the risk. Like my big contracts here, and then as price go lower, I'm scaling in probably like two more micros, right? You never just want to like dump 15 micros or like 15 contracts or anything here for your second entry, right? Your first entry is a pyramid, right? ICT spoke on it. It's like a pyramid. Your first entry is the biggest. second entry is small, and then your third entry is like smaller, just in case price pulls back, right? Your first and your second hold you down. But we're gonna see this right here. We see price pull back, stay inside that zone right here, right? I don't want to see price pull back up here, right? Or this prior high. So I give myself room. Price is playing around. Boom, right? Look how price respected this zone right here, right? Price pull back, use this OTE level. But if you miss that first entry, this could have been your second entry also. Look where price pulled to. Let me see if it hit that 4-hour target right here. Nice and simple. This is the market maker sell. This is a pullback continuation type of model, right? Where price is pulling. We use the lower time frame OTE, then for price to then extend lower to clear these lows down here. Bread and butter. But let's go another example. Right now we're on the 1 hour time frames, right? We're gonna do the same top-down analysis that we did before, right? We have to find our draw on liquidities and just basically where is the trend leading us to. So we see that price push down lower to mitigate this 1 hour order block right here, right? This is a 1 hour demand level. To then extend higher, the main reason price used this zone right here, you might be like, why did price just suddenly, right, tap inside of this zone? It's two things that's involved. I'm gonna extend this a little bit, right? First, we have our fair value gap. The fair value gaps are magnets. Even if price don't use the fair value gap, as you can see here, price purge through the fair value gap, the zone below the fair value gap, right, such as this IPA or this order block, since we have both in this fair value gap, this is going to be the zone that price uses to spin back, as you can see right here. And also, as you can see, this zone is also like a broken resistance level that's turned into a support. This right here was a bearish engulfing order block. Price came inside of this zone right here to push down lower. That's why you started seeing this drop right here, because a lot of sellers were expecting for price to start selling, but price extended right through this zone right here. So now this whole level has become, right, this whole level right here is now a support level. So we see that price push down lower, pull back. This is a pullback inside of this support level, and then on the 1 hour give us this market structure shift. And now we know that this old high right here is now our draw on liquidity, because price is just pushing down lower to mitigate this to then extend higher. Now let's get down to the 15-minute time frames to see more price action. Now we're on the 15-minute time frames. We have to find our new dealing range. As you can see right here, we have to find the prior swing low that take liquidity. So what was the prior swing low that take liquidity from this demand zone right here? As you can see, price push down lower to clear these prior wicks. These wicks right here are actually lower time frame. Let's go on to 5 minutes. You can see this is a lower time frame liquidity sweep. But on the 15 minutes, right, this is just like price just sweeps two lower time frame wicks, right? So price push down lower, sweep these lows to then extend higher to continue this uptrend right here. And then we started getting this sell movement right in this order block. So our new dealing range, right? Our dealing range is from this old low to this prior high right here. Now we have our dealing range, right? We have our key levels, the 0.62, the 0.705, and the 0.79 and the 0.88. This is where I'm going to place my entry right at the 0.705. My stop loss, you can either put it right at the candlestick low or right here also, right? This right here is a protected low. Whenever we have a strong bullish candlestick right here, if price even purged through this, that means the trade is just invalidated, right? It just saves us a little bit more, just in case price pushed through it. So this is the level that I want to go for. As you can see, this is the prior range high. This could be your first take profit, like I stated. And this hourly draw on liquidity is the second take profit. Let's go play price. Price pull back. Boom, right? I'm telling you, the 0.705 is the best, like one of the best key levels. Like it's so precise that it's scary, right? Either that one or the 0.79. Like either one of them, the 0.705 or the 0.79. Those are like the most precise levels, I'll say. And the 0.88 is those sneaky ones. I like possibly if you use like a rejection order block for the OTE, like then it's probably gonna pull back all the way to the 0.88. But now I want to see price pull back all the way up here. Give yourself room, right? First take profit out of there. Boom. Second take profit out of there, right? What concept did we use? What confluence? the ICT OTE. I use this every single day, like really every trade that I take. If it's like mainly like a day trade like this, right, I use it. But if I'm like scalping, I would say not really, because I'm more on the lower time frames, and on the lower time frames the ranges is way more different. But it's the same way I can take this trade too. This is the risk entry on the 15-minute time frames. If I don't want to take the risk entry, I just do the same exact thing. Scale down on the 5 or the 3 minutes. Let's go on the 3 minutes this time. On the 3 minutes, what did price do? Price push down lower, gave me a liquidity sweep inside of this 15-minute zone. All I want to see is this market structure shift clean. On that pullback, this is my unicorn model, right? I made a video on this already, so make sure you guys go watch that one right here. This is my unicorn model, where we have a fair value gap that's aligned with a order block. Fair value gap in an order block right here. Perfect. This right here is the entry I would take if I was live or trading, right? Day trading. This is the confirmation entry. Price using a 15-minute zone, pulling back, give me a market structure shift. Now I got that confirmation entry. I'm looking for that big extension. Just look how smaller the stop loss is, right? That's the main point, right? For these right here, even though we have the 30 points, is a 32, right? It's kind of the same, but just minimize. So you have your first entry, tag you in, and then you have your confirmation entry right here. Perfect. So I'm sure you guys watch that first OTE video, because I go over way more stuff in that video, also way more lessons, and then come back and watch this video where I explain even deeper the OTE. I hope you guys enjoyed this video and got a lot of value. If you're a person that want to work one-on-one with me and my brother Arkham Trades, make sure you click the first link in the description and check out the Spark Trading University. But it's gonna be it. Make sure you like, subscribe, and comment down below what you think. This is it. Spektrades out. Back, correcting itself,